Welcome to Money Matters with Greg, where we dive into the money conversations shaping your life. From investments to estate planning, insurance to taxes, we cover it all with a fresh perspective. Join Greg and his guests each week to get inspired and take control of your financial future. Let's get started. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.
All right, good afternoon and welcome to Money Matters with Greg. I'm Greg Farrall, CEO and president of Farrall Wealth. It's a wealth management firm here locally in Valparaiso, Indiana. It is April 16th. I hope everyone had a good tax day and got through taxes. As we know, April 15th is always a brutal day to get through, but hope you and yours was able to get through it. And as we talk about Money Matters with Greg here, as the show is really anything to do with money. So we know that obviously with tax day and how things have gone, recently, and the future of taxation, we'll see about all the permanent tax cuts and if they get instituted here in the future. But just letting you know that we feel for you, and hopefully you were able to minimize your taxes and get everything filed the way you needed to. We are financial advisors and run a wealth management firm here in Valparaiso. It's a wonderful little town that we have here, and we work with clients and ultra high net worth and high net worth individuals and families throughout the nation, as we typically talk about on this show, which is broadcast on WVLP 103.1 FM. As well as anywhere you pod, Spotify, Apple, you name it, YouTube podcasts as well. And then we do a video as well on our YouTube channel. So I hope you're able to check it out. We typically talk about money and how it weaves in and out of your life and how we can help out to add some value to your days of investing and savings across the board. Our broker-dealer is LPL Financial. It's the largest independent financial broker-dealer, one of the largest independent broker-dealers out there. And of course, they are our compliance department. So I would be remiss if I didn't mention that the opinions voiced in this podcast are for general information only and not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may suit you, consult the appropriate qualified professional before deciding. So with that being said, I'd like to kind of go into what happened last week. It was crazy. It was nuts. It was one of the most volatile since World War II, with the tax cuts coming in on April 2nd, and the historic two-day move that was April 3rd and April 4th, which is last Thursday and last Friday. The S&P dropped 1.6% on Tuesday, April 8th, and then surged again on April 9th, 9.5% on Wednesday, April 9th. It's the biggest up day since 1950. And then fell 3.5 points on Thursday, April 10th, and then jumped another 1.8% on Friday. And the S&P ended up nearly 6% for the week, which is quite a ride. We talk about roller coasters in this world and in the investment world, and certainly it was just that. Wanted to talk about that, the markets, the effects of the market, and everything else. But I also wanted to mention, just quickly, I was very honored and lucky to be a part of Indiana University Kelley Business School's CFP Wealth Management program. Yesterday, I was able to speak to a great class that it gave me great confidence that the world is in good hands. They have 130 people in the program now in the CFP program there. And there's probably about 50 or 60 students, all in suits, all in business suits, number of different nationalities, ethnicities, just phenomenal, extremely intelligent group. And I was lucky enough to speak to them, and I just wanted to put out a shout out and a thanks to everyone there that day. It just was really, really rewarding, and I want to thank everyone. I'm looking forward to helping out as many of those kids as we can, as far as mentorship and some of the things that I know we can help with. That being said, what about the Wild Week? Let's go back to that. A roller coaster is not a technical term, but it is probably the best adjective to describe the price actions for certainly for the week. So the S&P has swung from a low of 48.35 to a high of 54.81, and that is a 10% intra-week trading range that rivals the sharp price swings of back to March 2020 when we had to trade through a pandemic. So, in talking to clients and talking to friends and everything else, and looking for anyone to get asking for advice from us, it's in my career when I first started at the exchange of the Chicago Board Options Exchange and trading in the options pits. Um, I had to trade through a pharma basically crash. So my first pit was that I traded in was Merck, and I traded the stock Merck. It's the name of the pit is basically the largest stock that drove that pit was the name of the pit. So you had the Chrysler pit, you had the American Online pit, you had the Amazon pit, you name it. So I traded Merck, and this is back when the administration was attacking pharma and basically telling pharmaceutical companies that they were bad, and it kept on dropping every day. So I was going through that as a very novice rookie trader. Then I had a devaluation of the peso with Uno Banco de Brazil that had to navigate that. I had the dot-com boom, dot-com bust, up, down, crazy moves every single day. Um, a number of elections for sure. I had to trade through. Ultimately, traded through the Great Recession and decided to start a financial advising business right in the middle of that. That was a great idea. And start the firm Farrall Wealth that is today. And but lived through that, and then got through a pandemic. Oh yeah, got to say, nobody's ever traded through a pandemic in the history of investing. We didn't even know what that was. So that was new. And then now we have a trade war. So it's great. It's just been super easy to be an advisor in these environments and trying to help people navigate these waters. And last week was up and down 10%. I mean, you literally have a retracement down to the bottom and a retracement up to the top, or a move to the top. And really, as the market sort of like resumes its decline, this area is kind of key for for any technicians looking at this, trying to figure out where, if we hold these spots. Um, the good news is we are seeing signs of capitulation, which is a magical word in our world, which means that people are freaking out. And so usually when that means is the volatility index, Chicago Board of Volatility Index, so CBOE volatility index or the VIX, spikes from, a relative range of, let's say, 20, 22. It was just at 14. And it goes up to 30 during stress, 28, 30. It literally went to 60 last week, which is crazy. Haven't seen that since the pandemic. And uh, bearish signs of put options being bought, hedges on stocks, calls being sold, like lots of different hedging, and just extremely negative. Now, that being said, we've really seen a lot of that all settle just recently, and just in the past few days. Even though we're retracing a little today, we were up yesterday morning, and we're really seeing sort of the technical process in the market kind of heal itself, which is very, very healthy. This is a body that's had surgery that has been severe. It's been through trauma and it needs repair and time to repair itself. So, with that recovery, we're really going to watch for a shift in multiple things that can get going. Um, so, if you were to continue with the analogy as far as health goes, but we need to breathe again. We need to get the heart moving again. We need to get up and moving as far as rehabilitation and not sit on the couch and wait for things to get better. So that's coming. That's definitely improving. And we will see as we figure this out. It literally changes every single day. And in the last 5 or 6 days, there's definitely been a massive apathy for don't really want to hear tariffs, don't want to really hear about tariffs. I'm done hearing about tariffs. And, the market's kind of tired of it. And they're just figuring it out because they really haven't changed in the last 4 or 5 days, even though they did there for a bunch of times, every single day or every single hour. So once the market knows what the rules are and how to play, and most businesses do this as well, for sure, they know how to fix themselves and then figure out, okay, look, that's the game plan. Now we know what to do. This is what our plan is. And, good companies will succeed and will be very, very positive down the line. Again, it is healthy to have a retracement for a bull market. I fully think that we still are in a bull market, even though with a 10% retracement, it looks like we went into a bear market. Um, but I mean, some really good things to be able to be seen as far as that goes. The one thing I worry about is earnings. So banks kicked off earnings last week, and um, just about everyone else, really we were thinking kind of two things. First was the numbers won't matter because the tariff headlines will dominate, and it is what it is. And then second, companies have so little visibility that they will give this vague guidance or give any guidance at all because they're like, I don't know what the environment looks like because this is all new. We've never traded through a trade war. We've never done business through a trade war. So how are we supposed to know? So they basically just say, it is what it is. And the good companies step up and try to at least figure out something and give you some sort of guidance. But the expected earnings growth numbers for the first quarter really is going to be, they still have to be published. And I go back to the third and the fourth quarter of last year to really talk about, how we're kind of hesitant because things did soften. They softened well before Trump got in. And certainly, that was inherited. There was a lot of, I would say, there's a lot of government spending and there's a lot of government employment that was certainly propping up numbers as we find out now that really affected GDP and have affected overall numbers as far as the economy. But we're going to see here as companies kind of figure it out. You really have to sort through what companies are saying and how they're affected because they don't necessarily know as well. So a lot of really uncertain certainty. I think we did a podcast, John Farrell and I, my brother and I did a podcast about we were certain about things being uncertain. And April 2nd certainly made that happen. So what are we talking about as far as our year-end target? Look, I'm still saying that we're going to be, our latest range, we're going to be up in 6,200s from where we are today. We're right around 5,300 or so in the S&P 500. Still positive as far as this all goes, even though it's going to be a drag on earnings, and even though the tariffs are going to be, concerning for multiple different places, it's not so much for others, and they're going to benefit really well. I mean, if you are in the wheelhouse of American made and American done already, You're already seeing companies take advantage of that. Their advertising campaigns have already seen, come about. It was just what, 14 days ago that this all happened. So it's interesting to see how fast companies are taking advantage of the fact that if they are American made and American assembled, that they're confident that they will benefit. Um, that being said, uh, with earnings and going through earnings as far as the uncertainty, valuations really aren't all that compelling. We're getting a small premium to kind of take risk associated with equities, but it's still not great. Is some value out there. There are some stock picks to pick, but it's going to be really tough. We always used to say in the trading world in the pits, when do I buy, or when do I cover? And it's kind of like catching a falling knife. If you grab it, you got to grab it somewhere. You're going to get bloodied, and it might drop lower. But back to all of the rules that we talk about and what our investment committee talks about and what I try to help people out every day when they ask questions about all this is you have your good names, you have your good companies, you're confident that those companies are going to be just fine, and you looking to shop at a discount. I don't like walking in a Neiman Marcus and paying full price. Nobody does, and not even looking to see what's on sale. So look to see what's on sale, see if any of those names are compelling, do your research, and invest wisely, invest prudently. So as far as the volatility goes, we've had some huge drawdowns. I don't necessarily see that changing. We don't necessarily see that changing. In the near future, we're seeing, we need some to repair the body of the market right now. We need some small up days. We don't need this up 9% in a day type crap. We just need some really nice, solid, healthy days of up 0.2, up 0.3, up 0.4, whatever it might be. So since the recent uh, bottom of 48.35 last Monday, that washout, and sort of in conclusion here, that washout, that fear-driven, that waterfall decline was certainly abundant. And then following that sharp rally off the lows on Wednesday, when President Trump put a pause on high tariff rates, the risk-reward trade-off just doesn't look all that compelling right now. So several things are giving us a pause for sure, including the intensity of the trade war with China. We'll see how that all goes. The uncertainty about non-China tariffs and how those will land. We see those, and there's definitely boxing gloves on with two massive economies. And then we'll see. See if we retest lows, but we're definitely now seeing a range here that's going to be kind of stuck. So plugging along, picking and choosing, investing wisely, picking your spots, and then ultimately, for the long term, there's opportunity here. You really have to make sure that you are being very, very patient. If you're looking for conservative places to go, there are, when you look at the treasuries where they're paying, 4% or wherever they are now, those are certainly, encouraging signs that yields have not cracked. So that's, hanging in there. We'll see how that all goes. But for now, um, invest wisely, be calm, be patient, and hang in there. We're all in this together, and it has been a crazy April. So, with that being said, the show's Money Matters with Greg. Greg Farrall, CEO and president of Farrall Wealth, a wealth management company here in Valpo, and we're broadcasting on WVLP 103.1 FM locally, and then also podcasting anywhere you pod. Spotify and Apple and you name it, and where we are. If you need anything, you have any questions about what we do, just email me at greg@farrallwealth.com. It's like Will Farrell as far as pronunciation, but he spells it wrong. It's FARRALLWEALTH.com. That's FARRALLWEALTH.com. So Greg@Farrall Wealth. You can also find us on any of our socials on Instagram, um, LinkedIn, Facebook, and X as well. So reach out to me. Love to hear from you, and I'd love to have some questions. If you have any questions that you want to be able to talk about. Next couple weeks, we're going to sort of try to pivot away from the market talk if we can. It has definitely absorbed us here in the last month or so, without a doubt. We're hoping that we get a chance to get you some other things to talk about that can help you with your wealth and help you with increasing your wealth on a daily basis. So we'll be bringing that to you too. We also have a number of guests we're trying to bring to you as well. But thanks again for listening and being a part of this. Carry on, be patient, and invest wisely, as we always say. Thanks again. We'll see you later.
Thanks for tuning in to Money Matters with Greg. We hope you gained some valuable insights today. Remember, your financial journey is personal, but you don't have to go it alone. If you enjoyed the show, be sure to subscribe and share. Until next time, here's to making your money work for you. Securities and investment advisory services offered through LPL Financial, a registered investment advisor. Member FINRA SIPC.